everybody. My name is Liz. I am a loan officer with Clarity Mortgage. Clarity Mortgage is a mortgage broker banker. What does that mean? That means that our company has the ability to close loans in our name, and we also have the ability to work with several investors that will service the loans for the buyers. What do we do as a loan officer? Sometimes as a first-time home buyer, we understand that maybe purchasing a home can be spooky, scary, you know. But it doesn't have to be. The process is very simple. We want to figure out what is your buying power. How much can you purchase? You know, what's your affordability? What is your budget on your monthly payment? You know, a lot of times we think, well, you know, I want that $300,000 home, but I only want to pay $1,000. Not gonna happen. But we can bring, you know, we can be realistic. We can give you a general idea of what your buying power is. What can you purchase within your budget? What is important when purchasing a home? How do you get pre-qualified for a home? The main things are credit, income, and assets. Once we have that verified, then we can kind of break it down to see what loan products are available for you. What can we do? Do we have down payment programs for you? What type of product best fits you and your family? So does anybody have any questions before I?
Yeah, well, I wanted to touch on the down payment assistance and what are the different programs that you have?
So the City of San Antonio is one of the top programs that I like to use. The City of San Antonio has a great program for first-time home buyers. They give you anywhere between $12,000 to $15,000 to purchase a home. Most buyers can get into a home with as little as $500 down. It is a great program. It is free money. It's free money, guys. It's free. All you have to do is live in the home for 5 years and you never have to pay a penny back. So it's a great program. It's a great incentive. We do these daily. We're getting people into homes with no money down. The requirements, of course, there are some things that we have to do. It's like processing the loan. There are things that are needed, like a home inspection. The home cannot be a fixer-upper. It has to be a home ready. Because of course, as a first-time home buyer, you don't want to get your buyer into a fixer-upper situation. That's never good, right? Especially for someone who's a first-time buyer. You know, you don't want to get them into a home where they're going to immediately have plumbing issues and electrical issues, etc. So the home does have to be home ready to qualify.
What are the limits on prices?
The loan limits, they've increased them. So let me double check for you because they have one loan limit, one sales price limit for existing homes, and then they have one for new construction. And I know that the loan limits, the sales price have increased. Yeah. Mm-hmm. Okay. They're pretty high. I want to say, don't quote me on this. I'll double check my source, but I think in existing it's 228, and on new construction 248. Mm-hmm.
Okay.
That's awesome. It's pretty good loan size. Any questions?
So it has to be first-time home buyer.
It has to be a first-time home buyer or someone who's not purchased home in the last 3 years.
Okay.
In the last 3 years.
Okay.
Yes, and it has to be in the city limits of San Antonio. So
Okay.
it has to pay City of San Antonio taxes.
All right.
Yeah. There's some areas like outside of 1604 or areas that are considered rural development areas, they won't qualify. They want you to be in the city limits.
How long will this last?
This program has been available for years. The problem is that most people just don't know about it. They're not exposed to it. They don't know that this money is available.
So it's permanent. So it doesn't go away.
It doesn't go
the money
away.
doesn't.
Okay. Sometimes they run out of funding, but they restock and we're back in business. So we're able to help more buyers. Yeah.
Okay.
Any other questions?
Of course, it depends on the income and the
income, family size. Those things are definitely top of the list. You know, you have to be within their income limits. Family size is important, but those things are taken into consideration. They're also very strict with your debt to income ratio. What is your debt to income ratio? Your debt to income ratio is all of your debts, all of your monthly debts, meaning what is reported on your credit report are considered your debts, plus a mortgage payment divided by your income. That percentage cannot exceed 43%. And the reason for it is because the city wants to make sure, or the program wants to make sure, that the buyer is not over exceeding or over buying over their means, so that they're not at risk at foreclosure. So they feel that that percentage is the right percentage for a buyer to, for a buyer to be able to live in a home comfortably, affordable, and not be at risk at foreclosure within a year or two.
Okay. Some people are afraid to apply, or they think they know their credit score because they check on, I don't know, Credit Karma, or
mm-hmm.
you know, any other.
Yeah. What
place.
you see as a free service, and this is just all of them. What you see as a free service, like Credit Karma or Credit Sesame, something that is free, those are typically your retail scores. They're very different than your mortgage scores. What we pull is directly from the credit bureaus, what is most updated, what is, you know, your most updated debts, your most updated payments, late payments, on-time payments, etc. What we pull is accurate. So when you're monitoring your credit, like through Credit Karma or Credit Sesame, if your score says on the free service that it's a 620, then you can pretty much take 30, 40 points off from what we pull, what we see.
And if it's 830?
Then you can take 30 points off, 40 points
Okay,
off.
800.
Yeah.
That's good.
Yeah. That's still a good start. Yeah.
So if you pull their credit, how many points do they?
What's the impact on
Exactly.
on-
What's the impact?
Another,
Because
that's another myth where people think, well, if you're gonna pull my credit, it's gonna hurt me, it's gonna drop my
Yes.
points. That's not true. That's false information. When the only way your score is impacted is, for example, if within 30 days you went all over town applying everywhere, like you had 6 lenders pull your credit, and then you went car shopping, and then you went to Macy's and applied for a credit card, and then those are hard inquiries within 30 days.
Mhm.
So the hard inquiries are how many people have pulled your credit in 30 days. That's going to impact your credit. So when a lender pulls your score, when a mortgage pulls your score, it has no impact on
No impact.
it's not going to drop your score.
No.
Now, of course, you will get an alert from your free service that says, hey, you have an inquiry, you just lost 40 points. Trust me. Fake news. Fake news.
Now-
Fake news.
Now, if their credit is not ready, is not perfect, of course, it will not be, or
Right.
something is missing. Would you guide them
Of course,
on what to
yeah,
fix,
of
what to
course,
do?
Of course, that's the good thing about our company, and that's the good thing about working with a loan officer who's going to walk you through the process from start to finish. We track all of our clients. We work with them closely. If your credit's not ready, what I do is I will do a full analysis. I'll tell you exactly what you need to do. I'm going to just give you the secret. One of the biggest things and one of the quickest fixes is that your credit cards account for 70% of your scores. They matter more than your mortgage. They matter more than your car. If you had a choice to pay your mortgage or your credit card, trust me, you better pay your credit card. You will lose 100 points not paying your credit card. You will lose 15, 20 points not paying your mortgage. Of course, you want to pay your bills on time, obviously. But if you had that choice, that's how critical credit cards are. So most of the time, I always advise my clients to get a small credit card to build their score, to get them on the right track. Because again, if credit cards are 70% of our scores and you don't have any, well, that's the reason why your credit's not moving.
I have a question.
Yes, ma'am.
What if you have like a credit card but you just don't use it? Does it still count if it's clean? You have no debt, it's just like there?
So the way that the Bureau works, and of course I don't work for the Bureau, but I've been doing this for 10 plus years. And I can tell you that not using it, you won't maximize your points. So the way that your score will increase or get better over time is if you're not maxing out your cards, you're leaving a small balance on your card. Now, if the Bureau see that you're at a zero balance for the last 6 months, are they rewarding you? No, not really. So it's best to use it. Don't max it out. Maxing out your cards will impact your credit significantly, even if you never miss a payment. Maxing out your cards will drop your scores dramatically. The rule of thumb is keep your credit cards at 30% of the available limit. 30%. So if you can manage to do that, and have, between 2 to 3 or more, you're abusing your line of credit. But if you can manage to keep 2 or 3 cards under a low balance while you're fixing your credit, that's gonna help your credit.
Okay.
Ideally, I don't recommend credit repair unless my client has over $20,000 in collections. We're talking repos, foreclosures, and stuff like that. I wouldn't recommend it. For the most part, I'm able to guide them, walk them through the process, and fix their credit and help them get to where they need to be, so that way they can close on a home.
Can I have a loan if I just came out of bankruptcy?
There are loans, actually. We have portfolio loans that we call them niche products. Of course, the bank's requirements are gonna be higher and your interest rate is gonna be a lot higher, but there is the opportunity to get a loan with one day out of bankruptcy.
Wow.
Laura, you know something? I think a good idea for another reunion like this would be how to work on my credit score, what to
Yeah.
do, what not to
Yes.
do, et cetera, et cetera.
Yeah,
because
that's a
The
big,
credit is
a
the-
big
we
one.
don't know, and
Yeah.
we hear a lot of fake news
Yes.
about how it works and how it doesn't work, and I believe that would be a wonderful
Yes.
topic for
Yeah.
one of these great.
That is correct.
Yeah, absolutely, because
meetings
that's the
that
main
you do.
thing that we look at. We just, as a loan officer, the first thing you want to look at is, let's take a look at your credit, because that's going to determine which way we're going to go, whether we're going to buy a house today or we're going to buy, we're not going to buy for 6 months or a year. We create a game plan for you.
I bought a car on Monday, and the salesman said, if we make a credit inquiry and you don't buy a car, it's gonna hurt you. But if we do a credit inquiry and you buy a car, it's not gonna help. It's not gonna hurt. That's what he
Yeah,
said.
well, he wanted you to buy a car.
Because you said 30, no. He said 30. You said 30 days. If I'm inquiring all over
Yeah.
and I don't buy, it hurts. But he said if we do the inquiry and you buy the car, you'll be okay. That's what he said.
But then the thing is, and this is another thing, and this is one of the biggest things that we see in the industry is that we get the people who went and bought the car first before they bought the mortgage. And guess what? Now you
they're
don't
done.
qualify. Now you gotta live in your car because you can't buy a house. But you have a nice car.
You got a nice car.
Like, let's say my expenses are like 50%
We'll just have to focus, yeah.
of my income. I'm sorry.
No,
let's
you're
say
good.
my expenses are like 50% of what I make, year, month. Do I still qualify for a loan?
So it's very easy to figure out whether you qualify for a loan. Simple math. Take all of your debts, and we're not talking your light, your electricity, your cell phone bill, none of that. We're talking about what's on your credit report. What are your debts? Your student loans, your car, your credit cards. Tally that up. Plus a mortgage payment. What do you think your mortgage payment is? $1,700, whatever your mortgage payment is. Divide that by your monthly income. That will give you your DTI, your debt to income ratio. Where are you? Are you over exceeding 43% or are you under? So anything above 55, you're basically at risk. Not at risk, but you're over exceeding, you're overspending. You need a budget. Yeah.
Overspending.
Yes, you're welcome. Yes. We need to return something.
So can you give us your phone number,
Yes.
Elizabeth?
Yes, well, I have my card here, so I want to just show it
Yeah.
to you, see if you can see it.
Oh, okay.
Can you see it? So, it's Liz at claritymortgagetx.com. And then my cell phone is on there, 210-908-2926. As a loan officer, of course, I'm always available. That's one of the good things about what I do is I'm always available. You call me, you get me. And that's the difference between when you go to Bank of America. Bank of America is closed right now. I'm not. I'm still open for business.
Yeah.
So
Okay.
you need to get approved, you call me and you get me. Can I get you pre-qualified? Absolutely, within 5-10 minutes of your time.
Okay. Thank you very much. Thank you,
for having me.
Elizabeth. I'm looking forward working with many buyers soon.
Absolutely.
Thank you.
Thank you.